Okay, I think we're going to start. Good evening, everyone, and welcome. Thank you all so much for attending. And thank you very much to our wonderful panelists and our moderator. Before I hand you over to our moderator, I'm going to just give you a brief intro to GAIN for those of you that don't know about it. And we also have three quick questions we'd love you to answer to help us track our progress, and we'll ask you one more at the end. And I think it just comes up on your screen as a poll, and if you could just click a yes or a no, or arts or science, you'll see the options on the screen. I'm Vicky, I work for GAIN, and welcome to this session on the day in the life of an analyst. GAIN stands for Girls Are Investors. Sorry, I know some of you already know this, but some of you might be new to GAIN, so we just want to tell you a bit about us. And GAIN's goal is to address the staggering lack of gender diversity in the investment management industry. At the time GAIN was formed last year, only 10% of applications for analyst roles in the investment management industry came from women. And GAIN's goal is to get that to 50% in the next 10 years. And we do this by giving talks at school in sixth forms, and then events at universities, such as this one, panel discussions, workshops. We just launched our internship program, and we do all of this through the help of a wonderful network of volunteers, 4 of whom we have with us today. We've got 3 incredible panelists. We've got Sophie, Meeran, Freya, Easton, and Ronnie Patel, and a great moderator, Poppy Walker, who's going to properly introduce you to everyone shortly. And just before we start, I'll just like to ask a couple of questions. So if everyone could just answer these polls, that would be great. So I will leave this up to the side. Sorry, the last question's for the end. I'll probably just relaunch it at the end. So if you could just answer the first 3 questions when you get a chance, that would be great. I'll hand you over to Poppy now. Thank you very much, Poppy.
Great, thank you, Vicky. So good evening to all our participants, and I hope that you're keeping well during what has undoubtedly been a challenging period for many. I'm delighted to welcome you all to the GAIN session on a day in the life of an analyst. It won't be surprising to anyone listening that the typical day for most people has radically changed as a result of the global lockdowns, and as firms have had to evolve to a work from home environment and move to virtual meetings and processes throughout the year. It's my pleasure to be moderating this panel, which we hope will give you an insight into what you can expect from a role as an investment analyst, including the typical responsibilities, the highlights and the challenges, the skill sets that are required, as well as what you can expect from the working environment. We will also cover the pathways through which the panelists entered the financial arena, their future objectives, and the advice that they have for individuals considering their career options. We would love to keep this session as interactive as possible, so I encourage you to submit your questions in the Q&A box throughout the session, and I'll try my best to address them throughout the discussion. So on that, I would love to introduce you to our panelists, Nirali Patel, Sophie Meeran, and Freya Easton. To start the session, it would be great if each of you could introduce yourselves, introduce the firms that you're working at, and also the positions that you're currently holding. We can start with you, Freya.
Sure. So hi, I'm Freya. I graduated from Oxford in 2017 with a degree in biology, and I joined the healthcare team at Farallon in 2018. I then took some educational leave and got a master's degree in biotech and business from Cambridge, and then rejoined Farallon with the same team earlier this year. So Farallon is a hedge fund based in San Francisco, but has 5 other global offices and about 200 employees. And we have about 29 billion under management at the moment.
Great, thank you. Nirali?
Hi everyone. Thanks for joining today. My name is Ronnie Patel and I work at Cyrus Capital. Cyrus is an investment fund. We've got around $4 billion under management, and we invest across the capital structure of companies with a particular focus on credit. So for those of you who don't know, that's like a focus on bonds and loans. We're quite a small firm in comparison to some of the others you might hear about on today's call. So for example, in London, we're a team of about 6, and in New York, we're about a team of 15 or so on the investment team. And a bit about my background. So I graduated from Cambridge with a degree in engineering, and I've been working at Cyrus for around 4.5 years now.
Great, thank you. And Sophie?
Thanks, Poppy. So I'm Sophie. I work for Alta Advisors. I started working there in February of this year, having graduated from a degree in physics at Imperial the prior June. So Alta Advisors is a single family investment office which advises on a diverse portfolio for the benefit of a philanthropic European family. So we aim to generate long-term returns by partnering with third-party fund managers who are experts in their fields. In terms of size, it's quite small. So we have 17 people on the investment team and around 40 people in total at Alta.
Great, thank you. And just to round it up, so I'm Poppy Walker. I work at a firm called Stable Asset Management, and we provide strategic capital to emerging managers, predominantly within the public space. So what this means is if an individual wants to start their own asset management firm, we will provide them with the capital to launch their own fund and get the business set up and help them with both operational support as well as marketing and distribution. Okay, so great. So just to set the context for our audience, I know that we've touched on it briefly in terms of the areas that we work in, but it'd be great if you could expand on the functions that your firms serve within the financial ecosystem. Nirali, I don't know if you want to take that first.
Yeah, sure. So I guess, if I had to explain what my firm is, I'd say you think of it as like this entity, and it sits in the middle. And on one side, you've got your investors, and on the other side, you've got the market. So simplistically, what we do is we take investors' money and we try and make it grow. And that is, investing in a range of things that, fits into the mandate of our investors. So, some investors, if they're looking for exposure just in bonds and loans, that's what we would do. So I think that is simply how it would fit in. And who are these investors? So I think typically people think, high net worth individuals, people with a lot of money, and that certainly is true. But, loads of people need their money managing, such as university endowments and pension funds. So, if you're at a university and there's scholarships, there's bursaries, things like that the university provides, oftentimes, that money comes from the fact that the university can grow the existing capital, and they do it through investment funds like Cyrus.
Great. And Freya, do you have anything to add to that?
Sure. So Farallon is very similar to Cyrus in the place that it fills within the ecosystem. So we also very much sit between investors and the market and perform a similar function for our investors. We have a number of strategies that we use to go about that. So for instance, credit, as Nirali mentioned, similar on that front, but also long short equity, direct investments, and arbitrage. And then, so I work specifically, as I mentioned, in the healthcare and biotech team, which means that I personally end up doing a lot of scientific analysis and statistical analysis, because the companies that we invest in my team are non-revenue generating biotech companies. And so a lot of the value of that is attributed, or the market attributes a lot, that the value of the company is defined by the quality of the drug from a safety and efficacy perspective, as well as the market for that particular drug. So that's the kind of analysis that I end up doing.
Okay, great, thank you. And then Sophie, both you and I sit in quite a similar position in that we are allocators, so we are allocating to funds such as Nirali and Freya's, but more specifically, from the family office perspective, perhaps you could explain a little bit more about what a family office is. It seems like quite this elusive term, a family office.
So I'm sure all family offices have a slightly different strategy, but for Alto in particular, as I said, our clients are a European family and they're one of the most philanthropic families in Europe. So really our objective is to grow their wealth over a long period of time in order to sustain their charitable giving for decades in the future. And this means that our portfolio has a bit of an equity bias because we want our returns to be high enough in order to sustain their charitable giving. But also across asset classes, we will invest in public equities, private equity, venture capital, and then other alternative asset classes like real estate and real assets as well.
Okay. Great. So let's take a step back and think about each of your pathways into the industry. So we actually, each of us, all studied science. So clearly not studying economics or finance and investment. Yeah, each of us have found our way into the financial industry. So it would be great if you could take a step back, discuss your pathway into the industry, when you realized that you wanted to pursue a role in investing. Were there any other industries that you considered during this time? And can you remember what that key trigger moment was that attracted you to a role in investing? For me, I actually fell into my first role in the industry by complete coincidence. One of my friends was interviewing with a recruitment agency, and then they ended up calling me up to ask if I would apply for a role, just because she had mentioned something that I was working on my thesis for my master's degree. So it was, at that point, I definitely, wasn't set in stone with entering the financial industry. So it would be great to hear your stories and your pathways into the industry. Perhaps we can start with you, Freya.
Sure. So yeah, I had a very similar, very different route, similar sort of start point in the sense that I wasn't set on becoming an investor. I wasn't set on the financial industry as a whole. It was something that I had considered, but very much saw that the only route into it was via, investment banking, consulting. And I really wasn't sure whether that was the path that I wanted to take. So what I did know, so sitting as a third year undergraduate, was that I really, really did love my degree. I really loved biology, and I wanted to do something in that space, but the idea of academia didn't really appeal to me. PhD didn't really sort of tick the boxes that I wanted to be ticked by the next 4 years. And so I did a lot of applying across, and a lot of networking across the biotech and healthcare space generally, for various different internships. So I worked for a nonprofit in Kenya and Tanzania for a number of months, worked for a medtech device startup, a boutique consulting firm, and then I interned at Farallon's London office, working with their healthcare team, who is out in San Francisco. And I think the breadth of those internships really allowed me to sort of compare and contrast the different areas of the industry. And I think really importantly, which is something that I think I didn't really consider when I was in that first year of sort of working out what I wanted to do career-wise, what I liked in my day-to-day and what I needed in a job to feel sort of fulfilled, I guess. And working at Farallon, I just really, really loved the work. It was fast-paced, it was constant learning opportunities, highly varied, and I really clicked with the team, which is obviously an incredibly important part of your day-to-day. And I could really see a sort of tangible output to my work. So I guess to your question about the sort of trigger, that internship was really when I understood what it meant to be an investor, and I got to sort of watch it at work. And I realized I very much wanted to be a part of that. And I could do that whilst using a lot of my sort of science knowledge and my love of science. So just went from there.
That's great. That sounds like a very exciting trigger point. So
I'm very lucky.
How about you, Nirali?
Yeah, so I joined my firm straight out of university, and the path to it was, I'd done a couple of engineering internships and I wanted to try something different. So I interned at an investment bank. I enjoy the work. I didn't enjoy, staying up till 4 a.m. Resizing a text box. But you got to do these things sometimes. But in all seriousness, I liked the analytical work, like looking at a company, what its business model is, how it makes money. And the step that was missing was, actually being able to invest in that company, because investment banks, you were in an advisory role. So I looked at the careers website on my university, and this opportunity came up, and I just went for it. I'd say to everyone on here that, or the participants, that it's good to do internships. You certainly find out what you like, what you don't like, but an internship is a great learning process, but it's not always representative of what the job is like. 10 weeks is very different to doing something for 10 years. So I think it was sometimes working in investing straight out can be a bit daunting, especially if you're the only new starter, whereas in other bigger firms you might be in a class of many. But I'd say it was the right choice for me so far. So yeah, that's my path.
Great, yeah, we'll get onto that in a moment, but definitely perhaps you can differentiate at that point, what your typical working day is now, and perhaps contrast that to what the typical working day was in investment banking, without too much detail. We can get onto that in the next section, but I think it'll be interesting for the participants to hear, some of that differentiation, because it's a big universe out there with all these different roles within the financial industry. And as you say, I think you so rightly pointed out, doing an internship for 10 weeks is not the same as having a 10-year career. And it's very important to find out exactly what you like, as Freya touched on also with the analysis, the particular roles that you like, the particular roles that you're good at. I think also the culture of a firm, which we'll come on to too, but that's super important that you have an understanding of what type of environment you actually thrive in, what type of people you like working with. So I think it's a great point. And how about you, Sophie? How did you find yourself at Alta?
Slightly similar to Nirali. So although I did a physics degree, I was always interested in economics and finance, because I thought it offered a good combination of numerical analysis and then kind of qualitative factors as well. And so I decided to do an internship at Citibank in markets. And I liked the analysis that I was doing, but again, it was similar to Nirali. It was we're doing this because we've always done this. And it was quite rigid, I felt, in some ways. And not to say that every banking role is like that, but that's the impression that I got. And so I was looking for something in a similar area, but with a bit more original thinking and room for curiosity. And that's where I came across Alta at my careers fair. And I did the internship last summer, and it filled exactly the roles that I was looking for.
Okay. Well, wonderful. So perhaps we should move on to the main topic of today's session, which is a day in the life of an analyst. So perhaps each of you could start by describing, what you would expect your typical day to look like. What are your prime responsibilities? What type of work you're involved in, without going into the specifics, but at a high level, what would be a typical day essentially. Sophie, let's start with you.
Yep, so I would say I have three primary responsibilities. Firstly, looking at new investment opportunities with fund managers. Secondly, monitoring our current portfolio, and I have a particular coverage of managers that I'm responsible for. And then thirdly, portfolio-wide projects and more ad hoc analysis that we do. I would say the first two of those make up the bulk of my time. And I'll often be working with someone more senior on those, and with new investment recommendations in particular, we'll meet with the fund manager, meet with a lot of the employees, talk to them about the investments that they've been working on, start to build a thesis up, and then ultimately, if we decide to invest, we'll write a long investment recommendation so we can pitch it to our clients and hopefully finalize that.
Okay, and then perhaps you could describe a little bit further about, what the monitoring of managers might entail. From my position, we would have, for some of our managers, we have monthly updates to discuss what's going on in their portfolio, new positions that they've added, what's been driving the profit and loss of the portfolio, any significant exposure changes, things like that. And then we'll do more formal quarterly monitoring too. So I imagine you do quite a similar thing, but is there anything, that you have to add in terms of the monitoring, what you're specifically looking for, maybe how many managers that you have coverage of?
I probably have about probably 6 main core managers that I cover. I think on top of what you said, that's exactly right. That's the kind of things that we look at. It'll be monitoring the broader market environment as well, than any outside factors that could influence that manager. And then, yes, as you said, as quarterly reports come through, summarizing those, flagging to someone more senior any significant positions that have changed. And then when we next meet with the manager, we'll ask them to go through in detail what their thesis is behind that position, dig into the nitty-gritty of the market, the opportunity set, any competitors, what's driving the revenue growth, or what's underpinning their conviction in the company, for example. I think that's, and then if it's on the private side, they regularly raise new funds. So that will require a bit more work. When a new fund is raised, we will look at the opportunity in a lot more detail.
Okay, great. And Nirali, what about your typical day? No more of those 4 a.m. nights. So what's the typical day for you now, if you've not got all the excitement of staying in the office till 4 a.m.?
Yeah, well, no, there are still some days when I have had to do a couple of all-nighters on a certain number of deals, but yes, it's far less frequent. So it's similar to Sophie in terms of new managers and existing managers. I'd split my role into new investments and existing investments. So let's say an investment that we've got, the earnings have come out. So I'll come into the office, maybe I'll be reading the earnings report on my way in. If it's out before the market opens, it's digesting that information, then summarizing it, circulating it to the team, and then most importantly, coming to a decision of what we do, having seen that news. Do we increase our position? Do we sell? Do we do nothing? So that's kind of what you do with existing. You basically just take whatever new information comes, what analysis you still have left to do, and put it all together, and keep your model in shape and ongoing. And then when it comes to new investments, at any point in time, we'll have a bunch of names within the firm that we want to get to. And so we'll go through those, do a first pass. Is the name interesting? Is there anything that we can actually invest in? And then again, should we do more work? And then whether or not that turns into investment, it is something that we look into. And then of course, there's the important things such as, deciding what to have for lunch, what herbal tea to have this afternoon. So, all these things are important, and it's very important to strike a balance. So yeah, I think that's what my typical days look like.
Okay, great. And then Freya, you've mentioned that you're working in healthcare. You're quite often working on biotech type companies, and as you've mentioned, a lot of the time they tend to be pre-revenue. So you're actually having to look into the nitty-gritty of the science, the clinical trials that are ongoing, assessing the validity essentially of the science underlying, because you don't have a viable business model necessarily, or you don't have revenues from a company at that point. So while I guess the overall structure of your day might look quite similar, I imagine some of the analysis you're doing is, quite different within that area. But I'd love to hear, what your typical day looks like.
Yeah, absolutely. So I guess similar to Nirali in the sense my time is split between monitoring old companies, updating our thesis, and searching for new opportunities. But in terms of the clinical, the pre-revenue clinical companies, there are so many events that can happen, expected and not unexpected. So for instance, a clinical trial readout, which firstly can really catalyze the stock to go up or down, depending on the sort of positivity or negativity of that particular event. But then that also transitions often, or can transition the company from one that is just a pre-revenue biotech, it's sort of pie in the sky, you can sort of dream as much as you want to with the potential of this drug, to a company that then has the results, could get FDA approval off the clinical trial data, and then has to sort of execute. So that transition and the analysis around that transition is what I do a lot of. But yeah, it's very news flow driven. So when you sort of talk about a typical day, you can have a plan for your day and the things you need to achieve and the things you need to sort of tick off your checklist. But it can completely get thrown off if news comes in on one of the names that you cover, and you sort of have to pivot and sort of update your thinking and incorporate that information in a similar way, I guess, to the way the market does into your thinking, and then adjust that in terms of the way that the market reacts.
Yeah, I think that's an important point. Everyone can have this idealized view of how their day is going to go, but at the end of the day, within finance, no matter which part you're working in, it's all about prioritization, reprioritization. Within the markets, they're fast moving. So for Freya and Nirali, there's going to be constant news flow, constant information, looking at various positioning within the market. There can be stock moves for a variety of different reasons, given that there's a number of different types of strategies, a number of different market participants, all driving that stock. So it's very dynamic. And then for myself and Sophie, we're constantly, there's only limited resources within all firms, and you've got to constantly think about what's going to be your best idea, what work do you have to work on. Sometimes, there might be immediate action that needs to be taken with respect to a manager and analyzing it. I would say it's probably slightly slower moving than keeping up with the markets on a day-to-day basis, but definitely there's got to be that constant prioritization of work and resources within the firm. So what I'd like to discuss next is obviously COVID has had a significant impact on everyone this year, and transitioned our day-to-day lives, across all different elements, whether it's personal or professional. I'd love to hear a little bit about how your firms have been adapting to working both either virtually or a combination of virtually and within the office during this time. For us, we've had to transition to a lot of virtual meetings. Of course, there's been no business travel whatsoever. We've had to adapt our investment due diligence and operational due diligence processes. But I'd love to hear a little bit more about, how your day-to-days have perhaps changed as a result of everything that's been going on this year. Freya, would you like to kick us off?
Sure. So for me personally, COVID has meant that I am based in London versus in San Francisco. So that's been a big shift in terms of working with a significant time difference, and has been challenging. And it's something that, it's one of the things that I've had to adapt to in this sort of mid-COVID world. And I think everyone has their particular thing that they have found the hardest. But in terms of how the firm operates, as you mentioned, Poppy, as has happened with all organizations, most of the things are virtual now. And the key thing for us as public investors is management meetings, which are a key part of our analysis, are now virtual. So in a pre-COVID world, what management said, what they did, and how you were able to interact with them in meetings at conferences, or sort of when they came through the office and for various sort of office-based meetings are a really, really key part, and you can glean, information from both what they say and what they don't say. And shifting to a virtual world has sort of completely changed the way that you think about those meetings. You can get different sorts of information from them on a virtual basis, in terms of, and you have far less, I guess, physical cues into how they're thinking about what they're saying, but you can sort of, there are other ways to sort of glean information via the Zoom system. So that's it from me.
Great. How about you, Sophie?
Very similar to Freya, although I will say that I only started working in February. So I worked from home I worked at the office for a month, and then we had to start working from home. So it's been a massive learning curve. In some ways, it's good because we have like scheduled catch-ups at 8:15 every morning. It's good because you can hear from the directors any like rebalancing that's going on, and in March and April, this was particularly important. We were changing our portfolio quite a bit, so it was really great to hear, the high-level decisions that were going on that I probably wouldn't usually get to hear the reasons why they're happening. Also, it's a great opportunity to ask questions, having the meetings every morning to the directors themselves. The more difficult thing is, as Freya said, instead of manager meetings with pharmaceutical biotech company managers, we have manager meetings with our fund managers, and it's a lot more difficult to get to know people over Zoom. So yeah, and also I guess there's just the social side of working from home is not as good. Being a small team, we usually like to do quite a lot of things like dinners and social activities together, and yeah, that's all been stopped.
Yeah, it must be been an interesting time to obviously start a role, experience a month of what a typical interaction would be with your team on a day-to-day basis, and then obviously you have to transition to working from home. But I think it's, everything that you've touched on is important, and particularly, we're finding the challenges also when we're speaking with managers about having to do our process virtually. But at the same time, there's a lot of benefits we found. There's definitely pros, there's definitely cons. For instance, we can speak to managers rather than waiting for managers to travel and have to meet them face to face in the office. You can jump on a Zoom call. There's no lag time in terms of, even if I want to take a meeting in London with a manager that we know, even traveling to their office, even if they're based 10 minutes away, a 10-minute walk away, you walk there, you then wait in their reception while they show you to the room, and you actually gain a lot of time during the day. So from an efficiency point of view, it's been pretty good. But as you both touched on, those subtle hints, whether it's body language, which is particularly important when you're trying to build up a relationship with, whether it's companies, whether it's managers, that's super important. We've tried to get around it by just spending a lot of unstructured time with our managers. So rather than speaking to them at a formal time during the day, speaking to them either early in the morning when they're having breakfast or late in the evening, just to see how people's attitudes and their behaviors and, how they just basically change throughout the day, to give you a bit of an insight. But it's definitely been challenging. And how about you, Nirali?
Yeah, I think Sophie and Freya covered like most of the aspects. I'd say that for my role, yes, sometimes it is useful to be in, if I'm working with another analyst or another investment, and also kind of just sitting in the office and hearing other people interact. You do learn a lot from that. But having said that, as you say, Poppy, there's a lot of efficiency when you're working at home with no distractions. You can just focus. So I think going forward, I think that there's certainly a place for having a mixture of both working in the office and working at home, and maybe striking a happy mix with that.
I definitely agree with that that mix, because I think, yeah, as you put it, there are so many advantages in terms of your own productivity working from home, but I think the disadvantages come when you go from like 100 to 0 time. So as you said, Sophie, the social aspect, and I guess sharing ideas with your team, which is much harder to do over Teams or over sort of whatever internal messaging software you use. And you can get a lot of that from a couple of days in the office a week. Whereas when you go from 5 days a week to 0, you lose that instantly. And I think the post-COVID world will be interesting in terms of the way that workplaces figure out exactly how to optimize their employees, both sort of functional productivity and I guess happiness.
Yeah, definitely. Okay, great. I think that's a nice segue into perhaps discussing the culture at the firms that you work at, in terms of Nirali touched on it then, in terms of sometimes she's working on an investment with another person. Sophie's also mentioned that in terms of the insights into the decisions that are being made in the portfolio. Perhaps you could explain a little bit about the culture that the participants could expect within these types of firms, whether it's collaborative, whether it's a bit more siloed. Each firm is going to have its own DNA and its own culture, but I think it'd be a great insight if you could all explain a little bit more on how you're interacting with your team, and yeah, just the culture itself. So Freya, do you want to start?
Sure. So I guess at a high level, I'm very lucky because I think a lot of hedge funds, they have the reputation of, and I think this does play out in reality, sort of a very competitive, aggressive environment, which I think is often a product of the way that they're structured as well. Like they can literally some literally pit sort of teams against each other, and it can be incredibly competitive in that respect. But Farallon isn't like that at all. It's a very supportive atmosphere, and the kind of general ethos is more about providing the conditions for the people that they hire to do their sort of absolute best work for their LPs. The strategies themselves are quite separate, and obviously there is interaction between different team members, but in terms of the day-to-day, you typically only really interact with members, at least at an analyst level, you only really interact with members of your team. I'm quite independent, and people within Farallon, analysts, are pretty independent in terms of the day-to-day and the work that they do. But I check in with the sort of head of my team most days. And something that the Farallon is great for is the sort of empowerment, and they give you the room to grow and sort of and develop your own investor nose, which is a really important part of investing in the public markets, is finding those instincts and sort of, I guess, accessing them, which you only really do through experience. So yeah, I'm very lucky to have a really supportive team.
Okay, great, thank you. How about you, Sophie?
I would say at Alta, the culture is very much of taking responsibility quite early on. So you're encouraged to join as many meetings as possible early on, ask questions in those meetings, and then when we have catch-ups as a team to talk about what's going on with our week and what has happened in the portfolio in the past, few days, we're encouraged to participate in those calls and share our opinions. And in particular, one thing that has kind of stuck out to me is that after every manager meeting, if we have an internal catch-up, the most junior person will actually get asked first what they thought of the meeting. And this might seem a bit daunting, but it's actually a really great way to learn, because you can get your thoughts out there, and then someone who's more experienced can then tell you, oh, yeah, that was a really great point because of this reason, and maybe that you need to think about this some more, and like, did you pick up on this point, for example? So I would say that's something that definitely struck me.
Yeah, definitely. I've definitely been in that position, and it it can be quite scary, but it's such a great learning tool. And as you say, to hear the perspectives of others who have been in the industry for a long time, it is also very helpful. And it's nice when you get to this stage where you can actually challenge their perspective too, because you've developed your own thoughts. Nirali, what's the culture like at Cyrus?
Yeah, no, I would echo some of the stuff that Sophie and Freya said. New analysts, a lot is expected of new analysts and everyone throughout the firm, but a lot of support is given, a lot of training. And to state the obvious, like the strength of every individual is what makes up the strength of the team. And I think that's even more pronounced when the team is very small. So, ours is a culture of helping each other, because, as junior analysts progress, the more they learn. In that way, like senior analysts and portfolio managers can in turn learn from them, and it actually creates a more collaborative environment. There's more sharing of ideas, and I think that reflects in the investments that we make, because obviously if people are trained well, then they know what the right questions to ask are when a new investment is presented, to make sure we make the right decisions.
Yeah. Okay, great. So we've had a question come in, and it ties in nicely to our next section, which is, I guess, our section on advice to the participants today. So I was wondering if each of you could explain what you think the main skills are that are required for your specific role. And irrespective of whether an individual, has experience through internships, I guess distilling down your job, what key skills you think are important to be able to perform well within that role. Nirali, we can start with you.
Yeah, sure. So in terms of skills, I separate into like two buckets. There's like the skills you need to like understand what we do, and that's what are the financial statements, and what are the different metrics to look at a company, and I put that to one side, because I think that that is something that's learnable. And then in terms of skills, I think specifically, and there's all that teamwork and leadership and all that stuff, but more specifically, I'd say number one is intellectual honesty when you're an investor. And by that I mean, when someone asks you a question about your investment, like how much cash do they have, how much money do they spend on this or whatever, it's being able to answer that question properly, or if you don't know the answer, having the ability to say, I don't know, rather than making something up or trying to bluster your way through it. Because I think sometimes it can be very tempting when you're asked by someone senior and you're very new to want to try and impress. And then the second thing I would say is being precise. So a lot of the stuff we do, it's very analytical, and you have to be precise in order to make sure you make the right decision about whether you should invest in a company. And I guess that all follows on from whether you've done internships or not. I would say make sure you do an accurate job and get the easy things right, because that is something that you can do. And then once you get that basic done, you can focus on like the more complex things that come with this job.
I think that's great advice, and it's something that we hear from our managers a lot of the time, that intellectual nimbleness, the intellectual honesty. We ask our managers a lot about the type of culture, the type of team that they want to build, and it's incredible the amount of times we get told when they're looking for analysts to hire, they say, I have to have people who are honest with me because I can deal with mistakes, but what I can't deal with is if someone doesn't tell me about it, because then that's more detrimental to the portfolio than if you're open and honest about it, and you've recognized that and you take accountability and responsibility for it. So it's a good point. Sophie, how about you? What do you think are the key skills in the position that you're sitting in, and what are the skills that you're continuing to learn and continuing to refine today?
So the one thing that I will say is the most important thing, and I'm not quite sure that it's a skill, but it's really important to be curious. So when you're in a meeting with a manager, you need to ask intelligent questions so that we understand their reasons for investing, and find out what they think will drive returns in a particular investment. In some ways, you have to think of yourself like an investigator and trying to pick apart their investment thesis and, get to the bottom of something. In terms of skills that I'm still refining, I would say kind of realizing my mistakes before I send out a piece of work is one thing. You need to be super careful with everything you're doing and take time at the end of every project to check through your working before you move on to the next thing.
Yeah, I definitely think attention to detail is critical, particularly when you're dealing with clients and writing up recommendations, which all of us will be, whether it's for an investment, whether it's for a manager recommendation. That's a key skill to have and can easily be learned too. You just have to actually sometimes take the time. And what I would recommend is, if you're working on something, whether it's a piece of university work, whether it's your CV, whether it's a piece of work within your career, I would work on it and then always leave it for an hour, maybe a 2 hour. If you have the time, leave it for half a day and then come back to it and reread it with fresh eyes, because if not, you just reread it, because you've written the piece of work yourself, you just reread your own mistakes, because you need that fresh pair of eyes. You need that different perspective from having been away and done something else to then really kind of fine comb through it. And then, so Freya, without going into perhaps the technicals of what we've discussed in terms of the medicines, the therapeutics themselves, because that's quite specialized knowledge, but more from the investment perspective and analyzing investments, what are the key skills that you think are required for your role?
So I completely agree with Nirali and Sophie. I think curiosity was one of my, or not mine personally, but one of the key skills that I think is required. I spend my entire time asking myself questions, asking other people questions, and like really thinking about what could possibly go wrong, what could possibly go right, and sort of getting to the bottom of all those questions through further research to make sure we can make the most robust decisions. And then I think also, to Nirali's point, intellectual honesty, but integrity as well, from both obviously a legal and compliance perspective, of course, incredibly important, but an academic one. So you have to be razor focused, I think, on finding the truth, than just sort of accepting the easy answer, which comes first, as the market will nearly always catch you out on that. And then a third one, I think, and kind of ties in with that, is you have to be pretty humble. So I think working in the markets, the market is going to do what it's going to do, and you can't be deterministic about it, and you can't get frustrated when it doesn't do what you want it to do and what you think it should do. And I think humility and kind of accepting that, and also accepting, especially as a junior analyst, like when you're wrong, and accepting the learnings from people more senior or people just more experienced than you is super important as well.
Yeah, okay, great. That's that reminds me of something that someone once told me, which is the market is just a reflection of lots of different participants, and all trading with different objectives, with different styles, and what you talked about in terms of being deterministic, and that you can't control the market. And they told me a story where someone they were speaking to said, well, I'm predicting the stock price over the next 2 years. I can't predict what it's going to do tomorrow. And then literally he spoke to someone in the same building just down the hall, and they said they were doing a stat arb investment strategy, and they said, well, I can predict what will happen in the next hour. I have no idea what's going to happen in the next 2 years. So at the end of the day, the market's going to move. You've got to you've got to do your work, and you've just got to be honest, and then perhaps not get so stressed out when it moves against you. Okay, great. So thinking about the participants and as they consider their careers, particularly with this current environment, I was wondering if you had any advice for interviewing virtually, and how to be effective when you're interviewing virtually, it's obviously quite hard when you're talking to a screen. So any advice you have there would be, much appreciated. Nirali, do you have any advice?
Yeah, I was just thinking, I'm not sure I have any useful advice. I would say, make sure you have a good internet connection, good lighting, make sure your room's tidy. But otherwise, no, actually, I don't unfortunately have any more useful advice. I haven't interviewed on video conference ever, so.
Definitely. Freya or Sophie, any input?
Yeah, I guess the key thing, this is a personal thing as well, because I'm terrible at it. I speak so quickly, and that is one thing when you're face to face with someone. It's a completely different thing when your internet connection is so and you're trying to give a good answer and over Zoom, and it is just not quite making sense on the other side, or it's just harder to follow. So slowing down, and same things as Nirali, like make sure your room is tidy and your lighting is set up.
Yeah, unlike my weird green lighting I seem to have going on in the background, so I'm not even sure where it's coming from. Sophie, anything to add?
I have some advice about interviewing for investing, but not necessarily about interviewing over Zoom. I would say the most important thing is actually research as much as possible the company that you're applying for. Especially in investing, I think it's not super transparent on the internet, like what every single hedge fund, what every single family office actually does and how they invest. And that I've been doing a lot of the careers fairs recently, and the amount of times that I've been asked, do you have any tips for the application process? And whilst that's a great question, I think my biggest tip is really understand our business, and very few people actually asked me like what we did. And since there's so little information online, I would have thought that would have been one of the key things to ask. So yeah, that's my primary piece of advice.
Yeah, and I think it's difficult when you're starting out in in your career in an industry, but particularly if you can find someone to connect with who might have recently joined the firm and perhaps is also junior, if you can connect with them on LinkedIn, that can also be great, because it's important for yourself as well, not just for the firm. You want to make sure that the firm that you're applying to, as I've mentioned before, the type of culture that they have, the type of working environment that they have is going to be well suited to the type of environment in which you want to work. That's just going to be most beneficial for both the company and yourself. So it's a very good point in terms of making sure that you know the company and you know what they do.
I completely agree, and working in investing is quite diverse, and so if you really hone in on what sort of investing you want to do before you send any applications out, then you know that you'll be applying to the right sort of places, and also just increases your chance of getting a job. I mean, easier said than done, because it's hard to know whether you'll like something before you've tried it out, of course.
We've had a few questions that have come in. I'm just going to ask one of them. From your perspectives, do you think that you have to be good at maths to be, in the roles that you're in, to work in asset management or investment management? I'll leave it open to if anyone has any comments.
I think you have to be numerate. I think you have to be good, at least from my experience, you have to be good with numbers. That has to come to a certain extent naturally, at least I've found. But I don't think in any way you need to be a maths genius at all. I mean, obviously it's really going to depend what area you're in and sort of what's expected from you. But I think there are so many roles in investing where, as long as you can use numbers competently, you don't need that A star in further maths. So
yeah, I do agree in terms of being able to utilize numbers and use them to your advantage is, you know, particularly, I'm more speaking about your role than my role. I can answer for my role, which is, it's important to have an understanding, but what's important to my role is context, and you can get context from a variety of different avenues. So whether it's thinking about the manager's background, thinking about their specific strategy, thinking about the market environment and whether the strategy will be profitable. So there's a lot of other inputs into my process. But thinking more specifically about, you know, numeracy and what you're sitting in, again, I think the context can be important. It's not just the numbers themselves, but it's actually understanding what's underlying those numbers, what's actually driving a business model, what's driving revenues. But yeah, I mean, I appreciate the point. Nirali or Sophie, do you have any further comments?
No, nothing for me. I agree with what you and Freya said.
Yep, same.
I've also got, just very quickly, a piece of advice that someone once said to me, which I'm not sure if it's helpful or frustrating, but in terms of, they're a very intelligent individual, but they basically said that when they want to learn something or they want to learn something new, what they tell themselves is that everyone who is able to do that has just had to learn it. No one is born with this innate function. And yes, it might take hard work for some people, but at the end of the day, everyone has had to go through what you have to go through to get to that point of learning something new, which I thought was an interesting perspective. But yeah, and I just want to get through some of these other questions. So we've got, what do you think are some of the biggest challenges of being a new analyst? I'll leave the floor open in case, just for anyone to answer.
For me, it's the volume of learnings. I think it's there is so much as a new analyst starting that you don't know, and it's not like people expect you to know it. People have high expectations for you, but they realize you're on this learning curve. But just finding that curve and finding your groove, I definitely found challenging at first. I felt like I needed to know everything instantly, and I needed to contribute in a meaningful way immediately. But that, you know, isn't the case. At least it's not the case that I've found. And taking your time and being methodical in terms of approaching that vast quantity of things you don't know is much better than looking at it and panicking and not being productive in the way that you could be.
Okay, great. Anything further, Nirali or Sophie?
Yeah, what I'd say is I might just answer this with the downsides question, because I think they are a bit interlinked. Yes, I think as a new analyst, it can be overwhelming because there's so much to learn, not just about the technical aspects of doing the job, but then all, like, the whole universe of securities. And I would say, you know, you have to balance like a lot of things. And I would say one of the downsides, I mean, it's also can be a good thing, but, you know, when you leave the office at whatever time, you don't leave your job behind, because, you know, you've got all these investments that they're always there. They are like your responsibility. So I think that's one of the downsides, is that, like, you kind of, work is always there. You know, it's enjoyable, but at the same time, you have to be able to balance that with your life. So I think that's probably one of the downsides.
Yeah, I would agree. I think a challenge has been prioritizing, in that you have like multiple things on your plate at once, and on top of that, there are things that pop up in the day that require your attention, and it's up to you to decide how urgent that is, what portion of time you allocate towards certain things. I mean, you could probably spend a day on just one task if you wanted to, but you don't have unlimited time. So time management and prioritizing, I would say, starting out has been the biggest challenge.
And I just want to say, when I say you're always thinking about your investments, that's can be at times, for me, most of the time, it's very exciting when I'm thinking of like the companies, what they're doing. But it's, you know, it's when, you know, that bad piece of news comes out or something that you weren't quite expecting, and that's when it kind of follows you into the weekend, and you're thinking about how, you know, you can adjust your portfolio or what you can do to mitigate any bad news. So yeah, good and bad.
Yeah, on that, it is just difficult to switch off, but that's probably a positive thing in terms of what it says about how much you enjoy your job. Like, you're constantly thinking about sort of what's the next thought process, what's the next question I can ask, like how can we do this better, how can we structure this more cleverly, etc., etc. So it's a downside that comes from a serious upside, to your point.
Yeah.
Okay. Well, with that, I would like to thank all of our panelists again, and also all of our participants. And I will hand back over to Vicky.
Thank you all so much. I'm sure all our participants have agreed that's been an incredible session, and I hope you've all found it really useful and taken away a lot from it. Thank you again to Sophie, Freya, Nirali and Poppy. Honestly, we couldn't do what we do without you. We couldn't run the session without you. So thank you so much for giving us your time and your experience and sharing with us all that you have. And on that note, this is the great thing about GAIN, is that we have this amazing network of women who have so much experience and want to share it with everyone. So please do stay in touch with us. If you haven't signed on to our newsletter, you can do that on our website. It's www.gainuk.org. We're on all the social media channels. So we are Girls Are Investors on LinkedIn, Instagram, and Facebook. Please follow us. And on Twitter, we're just our investors, so no girls on that. Thank you very much, all of you, for attending. And again, thank you to our speakers, and hopefully see you at the next GAIN event. Thank you. Bye.